Rates just dropped, but you're already locked in buying a house. Now what are you gonna do? When you lock in an interest rate, you are locking in to protect you against higher interest rates, meaning that if rates go higher while you're in that contract, you are typically going to be protected. Now, if rates go lower, which we've seen happen, don't worry, you've got some options to get a lower interest rate. Now, number one is going to be a float down, just like what it sounds. You can float the interest rate lower. Now, number two is going to be a cancel and relock. Now, you can cancel your lock, relock it into a new interest rate. Now, number three is going to be a wait and refinance down the road, meaning that you go through your transaction, you get the interest rate that you're locked in, and down the road as interest rates come lower, you can refinance into a lower. Now, they all have their pros and they definitely have their cons. You're gonna wanna check with your lender to make sure that each policy is going to be known from you, the client, and really understand how that works. Now, pro tip, this is what no one talks about, but you typically have lenders that will offer a renegotiation policy. Now, this has to be consumer driven, that you are watching interest rates and you go back to your lender and you tell them that you're either going to walk and not proceed with this loan and you want the lower interest rate. There is a renegotiation policy and typically there is a cost to this. Last but not least, you're gonna want to check with your lender that you're working with, because every single bank, every single lender, and every broker has different policies potentially for the ones that I went over with you. So you're gonna wanna get a real deep understanding and you're gonna wanna be very clear with your lender about what you're trying to accomplish.